Hey guys, I want to welcome you back to another episode of Forex Tech Magazine. Happy Monday to you. Hope everyone had a really great weekend. What we want to do right now, before we get too far into this, actually, what I want to do, I want to check my sound levels because I'm open on another screen and I'm hearing some replay. Okay, 1 2 1 2 testing. That is better. Yep, don't hear the echo anymore. All right, good deal. So, yes, before we get too far into this, I want to go ahead and put out the disclaimer. The information that we're providing to you is strictly for educational. Oh, hold on a second, still not right. Testing, 1 2 3, testing, 1 2 3, testing. All right, now that actually is better. Okay, once again, so the information we're putting out to you today is strictly educational and entertainment purposes only. Oh my goodness, this thing's still here. Hold on 1 second, folks. All right, that should have done it now. I apologize. This is not how we normally start out the show. All right, anyway, so the disclaimer here. All the information that you're going to receive today is strictly educational and entertainment purposes only, for entertainment purposes only, right? If you are seeking financial advice, our recommendation to you then would be to seek the advice of a licensed, competent advisor. Right? Nothing that we are sharing with you should be considered as financial advice. So once again, educational and entertainment purposes only, and trading forex, futures, options, any type of securities always comes with risk. So please do not trade with money that you cannot afford to lose. Okay, now now that we got that out of the way, let's get into this, man. Let's go ahead and get right on into this, right? Um, a couple things, last Friday, there's a couple things going on in the market, and if you had opportunity to go back and look at that tape, or I mean, look at that episode, or if you were actually with us when we was filming that episode, you know exactly what I'm talking about as far as those support and resistance zones that were in the market that we were looking at. Actually, it was more resistance zones that we were looking at, and thought that the market got a little top heavy at the time, and that it might be a good opportunity to kind of fade a pullback in the market, and we did. And so, what I want to do today is I want to share with you, as usual, our what went right, what went wrong during our trades, and just kind of walk you through each one of the trades that we took, and then just kind of talk to you about what was the mind state, what were we thinking about, why we took the trade, and what was the outcome ultimately from that trade. Okay, so let's go ahead and get right on into that. And the first trade we'll start out with is the Great Britain Pound U.S. dollar, right? And if you notice here on the chart, what I always try to do is I try to color code things to kind of make it a little simpler for us to follow along. So my stop loss is in red, my entry price is in blue, and then my take profit is always in green. And then the black lines you usually see are going to be like our support and resistance zones. And if you haven't heard the speech about the support resistance zones and why they're so important, I'll give it to you again. Um, One of the first things that you should do when you start a trade, any trade, is you need to find out where you're at in relation to the rest of the market. Now, are you close to resistance? Are you close to support? Things of that nature, because that really is going to help kind of help you decide whether you're going to be buying or selling that market, right? And so the smart thing to do is when you first come into your screen, try to go ahead and mark off and find where your support and resistance zones are at. First part of your analysis, and then once you find out where your support and resistance zones are at, then it's going to give you an idea of, what you should be looking to do. Should you be looking to buy? Should you be looking to sell? Right? And also, too, you want to be looking at whether or not the market is trending and what direction it's trending if it's trending. Right? The other thing you want to look at too. I'm sorry, I just want to do a little housekeeping here real quick. Get out of here, get over here. All right, cool. Thought I saw something. All right, so the other thing you want to look at too is the trending, trend lines, support resistance zones. Then also, you look at your candlestick formations, stuff like that. I mean, these things typically are going to help you just make better trades, in my opinion. The more things that you can find that confirm your belief as far as the direction that the market is going to take, it's just going to be more helpful, more beneficial to you in your trading. And it's going to help you to be more of a disciplined trader versus somebody that just comes in here and just say, hey, you know what? I think I'm going to go long in the market today. Or, hey, you know what? I think I'm going to go, short the market today. And, for whatever reason, then you just, end up blowing up your account. Okay? So we don't want to do that. We want to make sure that we come in, have a method to our madness, right? We want to be methodical and logical when we come in here and we put on our trades. And part of that and being a disciplined trader is that we go in, identify certain zones, certain support zones, resistance zones, and then we go ahead and start trying to make our trade from there. So this right here was a resistance line, right? And if we kind of make it smaller, you kind of see what I'm saying here, right? You see where price went up, hit it, came back down, price went through it, came back down through it, came up through it, came back down through it, came up through it, came back down through it again. So for whatever reason, price either touches this thing and turns around, or price goes through it and just cannot maintain and goes back down through it. So this is a resistance zone. This is the area in this market whereas sellers come in when they see price starts to approach this zone, and they really put the pressure on to try to sell this thing back down, right? And so in knowing that, on Friday when we went in, here's the 3 o'clock candle. 3 o'clock candle was up here, right? And we have seen this thing play out before, where it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. And I was like, oh my goodness, well, what if it goes down again? I'm just thinking to myself, it's already did, 1, 2, this could be the third time. Why not? Looks like a great place to short to me, right? And the reasons why is because, one, it was above resistance, and I've seen before in the past where when it was above resistance that it came back down. And then two, I was looking at I was looking at the candlestick pattern on this one too. So let me just check something. What's that at? Also, too, if you haven't already, go and download this software or sign up for this software. It's not anything you have to download. It's cloud-based, it's web-based software, but it's really good. Full disclosure, we are an affiliate of this software company. This is the Smart Trader software. But even if you weren't an affiliate of this company, I would still recommend this. It's one of the better softwares that's out there for traders because it's very intuitive, and they have what they call these smart tools, and they just automatically populate, your chart with, things that traders need, like candlestick formations is really important, especially when you're a new trader and you're trying to learn. Even you're an older trader, sometimes you don't really want to sit there and look at each one of these candles and try to figure out this is a bearish engulf or tweezers or whatever. You got better things to do with your time. This right here makes it, 1,000 times easier, and it's getting you the information in real time, and it's good. So anyway, the main thing was that it broke through resistance. It was at a resistance at the time, right? Here's my 3 o'clock candle. Just looked at it. seemed like it was just top heavy. So I just said, you know what, we're gonna go ahead and we're gonna short this one, right? We'll put our short a couple of pips in below the close of that 3 a.m. candle, and then we put our stop loss a couple of pips above that 3 a.m. candle, just in case the move went against us. Because the other thing you never know is that if resistance is gonna at some point turn into support, right? And if you notice, on the 4 o'clock it came down and touched that resistance line, right? It got us into the trade, and then it just kind of bounced around. So that was kind of one of those things like, okay, did you make the right decision or not, right? And I still felt confident about it. I mean, around by this time, I had already went off and did something else. I think I was probably either sleep or running errands or something. I don't know. At any rate, I didn't get back in to check this until like later on in the afternoon. I didn't look at it the whole day. I think probably around about 5 or 6, I came back and checked it. When I did, voila, right? Price had broke down, and we were profitable, right? Which is really good. Love that trade. What went right about that trade? Everything. Right? What went wrong about this trade? Nothing. Right? What could I do better in this trade? Nothing. Right? Only thing I could have did better with this trade is, took more money. Right? Right? Could have taken more money. Only thing I could do better with this trade is this right here, which is bring my stop loss down. Right? Could have put my stop loss around here somewhere. Right? And then took my take profit and pushed it down to like the next level. Right? Next level of support, which has probably been right about here. Right? And if you look over here, it could have been here, or could have been here, right? As far as the next level of support. Only other things that we could have did different about this trade. That's it. But overall, I'm happy about the trade. We made money on the trade, that's what we want to do. All right, so that was a good trade on Friday, and we, analyzed the market correctly. We put in our entry order correctly, and put in our stop loss because we always trade with one just in case the market goes against us. And we were handsomely rewarded for our discipline and our approach. So yay for us. Let's look at the next one. Next one is the Great Britain pound, Australian dollar. Let's look at that one, see how that one played out. All right, once again, red line is our stop loss. The blue line is our entry. And then the green line is our take profit. Okay. So let's go back and track where our candlestick was at. What was going on. This is at 12:08. This is our 3 a.m. candlestick. I gotta think, right? Yeah, I took out the what you calling this? I took out the that's okay, I'll put them back. Well, what I was saying was I had taken out the support resistance line on this one right here. Usually what we try to do is just kind of like push push it over one and just kind of like look at the what's going on to the left or where the price is currently at, right? And just kind of put our support and resistance lines in based off of that. What we never want to do is we never want to get caught up in directional bias, right? And we don't want to start seeing stuff that's not there. And sometimes if you're looking at what price is at right now, you'll sit there and you'll start trying to make everything fit with where the price is at now, right? So give yourself more of encouragement to go ahead and take that move right now, and which is the absolute worst thing you could do, right? So one of the best things you can do is just kind of come in here and do this, where you just go in and you say, hey, look, go to the far left, put in support and resistance zones, and you notice how they line up so perfectly with what's going on right now in the market, right? So those right here was a resistance zone. And you notice right here how price came up and hit that resistance, went down. Price came up, hit that resistance, came down, right? Support, price came down, hit it, came back up, hit it, right? Same thing right here, right? So these things repeat themselves over again, and all you really got to do is just go ahead and put them in and just kind of look for it then, where you're currently at now, and look at price, for the most part, adhere to it. Now, there's going to be some times, of course, when price is going to break through support, price is going to push through resistance, and that's fine, right? But we want to be mindful of where these things are at, because Because once again, if we know where they're at, then we kind of know what we should be looking at potentially doing. We should be looking at potentially buying, or we should be looking at potentially selling when we get to that area. It's kind of like when you go to the mall or you go to a big building somewhere and they have those little placards up there and it says, you are here, right? And then they have all the other little areas in the mall or the building, right? It's to kind of help you identify where you're at in the market, right? And for you to be able to kind of get to where you need to go. Because if I know I'm at a support zone, unless there's like absolute a lot of selling pressure on that currency pair, why would I want to sell at a support? Because the support is typically where buyers come in the market and push the price up, right? So if I'm at a support zone, 9 times out of 10, I'm going to be looking for a reason to buy that market, right? And so I'm going to be looking at candlestick patterns really hard there to see if something's, giving me that, okay, that confirmation, hey, we need to go ahead and let's buy now. Start buying the stuff up, start accumulating. So let's find that 3 o'clock candle. There we go. So Friday, 3 o'clock candle. All right, so the cool thing was when we look at this candle right here, right? So we say price had already went through resistance, right? Ooh, went through resistance, came back down, right? Try to go back up through it again, came back down through it again. Try to hit it again, came back down again. And also, too, is making here's a high, here's a lower high, right? Then it tried to go back through it again another time, right? Another third, fourth time right here. And it couldn't, right? This is the 3 a.m. This is where we're at, 3 a.m., right? And I saw where it closed at. And I said, you know what? It's right here at resistance. Why would I want to buy right here at resistance? Especially when I've already seen where 1, 2, 3 opportunities prior where it tried to push through that same area of resistance and it was just getting kicked back. And each time it's getting weaker trying to do it, right? This time it was a strong time trying to get through it. Because, of course, it had a lot of energy coming from where it came from, right? But now, the energy is not the same, right? It's selling off and it's trying to push back up again. Selling off and it's trying to go back up again. Selling off, going to the side, trying to push back up again. So that was kind of a no-brainer. I said, you know what? I'm going to sell this one. And so we went in and put in a sell order, a couple of, pips below our close. And actually, I think with this one right here, we wound up having to do a market order because the market actually turned fast on this one. And that's why it's not as close to the candlestick as we had originally liked. But once again, it's one of those things whereas, you know what, we did our analysis, we looked at it, and felt really confident about this downward move. Like I said, once again, seeing how it's already started the downward trek, and we're right here at the resistance line. So, at any rate, we put in our buy entry, right? And within a couple of candlesticks, let's see, it's 4 o'clock, 5 o'clock, 6 o'clock, 7 o'clock. Yeah, 6 o'clock, right? 5 o'clock, 4 o'clock, 5 o'clock, 6 o'clock, 7 o'clock. There you go, 7 o'clock. Boom. It got triggered. Our take profit got triggered, and we was out of the trade, right? Quick, fast, in a hurry. Easy money. Easy peasy peasy, right? The good thing about that is this was pretty quick, right? Made some good money on this one, which is always good, right? And so what went right about this one? Everything. What went right about this? What went wrong about this one? Nothing. Once again, it's another one of those scenarios where, okay, well, what could we have done better? Only thing you really could have done better in this one right here would be to move the stop loss down after you get into the profit zone, and then move your take profit further down. So that way you have what we call a risk-free trade on, right? And even when you do that, though, you still got to sometimes be careful because you just never know how price is going to come back against you, right? So given that scenario, what if we would have had, moved the price down and moved our take profit down, during the 8 o'clock hour, right? Which is right here. And maybe we brought it down to here or something, and then everything's looking good for the 9 o'clock hour, and then all of a sudden we get stopped out. So you follow what I'm saying? So you never know. We still would have got stopped out, more than, I guess, maybe more than what we did now. But there's scenarios that come into place whereas price does pull back aggressively before it makes another aggressive move down. And if you got your stop loss, whatever, in place too close, it could get you stopped out a little too early. So And sometimes in these scenarios right here, another thing that may be kind of good to use, and we'll talk about this in some later episodes, is a trailing stop, right? And maybe use like a dynamic trailing stop, something that's based off of like a so many pips or something with the ATR or whatever that kind of helps adjust for the movement in price. But once again, that's some stuff that we can talk about a little bit later. But for now, the main thing you need to understand is that our analysis was correct, right? And remember too that when we're doing these analysis and when we're going through and we're doing this stuff, we're just using the basics, man. We're not coming out doing anything fancy schmancy. We're just using the basics. It's support resistance, right? That's what we're looking at. Think about what we've been using for support resistance, right? And trend lines. I mean, those are pretty much the only things that we've been looking at using to base our trades, man. We'll look at support and resistance. We'll look at the candlestick where it's at in relation to the support resistance line, and then money management. That's it. We're not coming out here with a whole bunch of indicators on our charts. We're not using any type of fancy charting software. We're not doing anything out of the ordinary. Just the basics. One thing I do talk to you about, though, I talk to you about trying to make sure that one thing I do try to talk to you about is I do try to talk to you about candlestick patterns and formations and stuff, which we'll get more into that a little bit later on, because I think that's a very powerful thing to add to this. Because remember, when you're looking at these charts, all you're looking at are visual representations of fundamental information that's been disseminated through the market, right? When you start seeing people selling off, it's because they either heard something or read something that fundamentally makes them feel that this currency pair, that the weaker currency pair is going to be stronger than the stronger currency pair for the foreseeable future, right? So they're selling off. Vice versa, if you see the currency pair is increasing in value, then you say, okay, well, the strong currency pair is stronger for whatever reason for the foreseeable future, and so we're going to be, buying into that one. So that information is given to investors or traders, and traders then come in and make trades based off that information. And so when you start seeing like these type patterns, you start seeing this type candlestick right here where it's kind of like a little spinning top, where people kind of get some hesitation about pushing the price up farther, and you've already seen where the price already is, starting to come down, right? It gets you in the mindset, you get, with experience, you understand that, hey, you know what? Buyers are not ready to jump back into this thing just yet, right? Because sellers are pretty much in control of this because, for whatever reason, they believe that the Great Brent pound relative to the Australian dollar is shouldn't be priced this high, and so price needs to come down some more, and that's all you see. Okay. So let's get on to the next one here. Let's hold on one second. I just want to check something on another screen here. Okay. All right, so the next one we're going to look at, I did not trade the Great Britain pound, Japanese yen, and I believe it was because I was a little afraid to get into that market. It seemed like it was kind of going sideways, I thought it was. Or something was happening with it on Friday. And I just was like, nah, I don't think I want to get into this. Yeah, because if you look right here, I mean, it's kind of like a sideways thing. And I was just like, I didn't want to get into it. I didn't want to deal with it. And for me, I much rather try to trade something that I see a trend in. Either it's trending up or trending down. Sideways stuff can sometimes be a little difficult, right? But we can trade it. But I just felt there was enough opportunity out there for us to not have to really kind of mess with it. Hindsight being 2020, I kind of wish I would have had, because it just kind of like it just melted down like everybody else on Friday. I think Friday just wasn't the Great Britain pounds day. I mean, everybody just kind of sold it off on Friday, which was the right thing to do because it was at levels. It was at some pretty high levels, and it needed to retrace some of that. So, congrats to everybody that made money on this currency pair on Friday. All right, so the next one is going to be the Great Britain pound, Canadian dollar, which is another one that we got into and thought it was a pretty good one. Once again, the black line is the resistance line slash support line. Because remember we talked about this before, that support and resistance lines, it can be interchangeable, right? 1 minute it can be resistance for a currency pair. Excuse me. In the next minute it could act as support, right? It just all depends. And so you got to be mindful of that when you're going through and you're putting these lines and putting everything in place, because you just never know. And whenever you get close to that line, that's when you really got to go in and start doing your analysis. Okay. So, at any rate, the red line is my stop loss, and the blue line is my entry buy, and then the green line, of course, is our take profit. Okay. So, once again, find my 3 o'clock one. 3 a.m. 3 a.m. There we go. 3 a.m. So, once again, I'm looking at this right here. It's 3 a.m. Right? And I'm saying to myself, what to do, what to do, what to do. Right? Are we going to short this thing, or are we going to go long with this, or we're going to stay neutral, or we're going to get out of it? You know, what should be done here, right? And once again, just kind of looking at taking into consideration the fact that we've already went through resistance, right? One time, came up, came back, and that same resistance now has become support, right? Goes up, but it goes back up to pretty much the same level up here as it was before, right? This is letting me know this right here is kind of a resistance in itself, right? Because price goes up here, and for whatever reason, when it gets into the zone right here, sellers come in and start selling it down, right? And then it hits this prior resistance, and all of a sudden now, this becomes support, and it goes back up again. Sellers sell it back down, it goes down, it comes back up again. Sellers push it down, right? 3 a.m. candlestick, where we at again? Boom, boom. We're right here, and you know, 2 things right away. One, it just came from getting pushed down, right? I don't know if it's going to go back up again. It might, but I don't know. I'm thinking that if anything, it's going to probably maybe come back down to that support line, right? But the other thing is that if it comes back down to that support line, could it possibly have enough energy to come to my take profit, right? That was the key, you know, that was the key thing right there. Would it do it, right? And so what I was looking at is that it had 1, 2, oops, let me do that. It hit this bottom twice, right? 1, 2. So that could be considered to be a double bottom, or even considered to be a double top, right? Kind of like a head and shoulders pattern, right? Here's the shoulder over here, here's the shoulder over here, here's the head over here, right? But one thing I knew, once again, this is based off experience, is that if we break that neck line, right, which is where support was at right here, right, then we'd have a clear path down, right? But we'd have to break that neck line, right? Shoulder, shoulder, head, right? So looking at it, and like I said, given the fact that it's been there before, first shoulder, head, second shoulder, right? We're from that last one. That gave me confidence enough to say, hey, you know what? I want to go ahead and sell this thing. I want to go ahead and sell this. I want to be a seller on this thing, and I think that we're going to be able to break through the support right here and get to a lower level. And thank goodness we sold it, because guess what happened? We broke through support, and bam, we went to a lower level. And that happened around about 10. Well, actually, first happened around 8 a.m. So we got in at the 4 o'clock hour, so about 4 hours. After about 4 hours, we hit our target, which is cool. So once again, that one went right. So what went right about this one? Everything, you know, analysis was perfect. We hit our target, which is perfect. What went wrong about this one? Nothing. You know, did everything right. You know, this one right here, we didn't have to chase the market. We actually was able to set pretty close entry to what we, you know, to our 3 o'clock candle, which is what we wanted to do because we want to get the most out of this move. The move was triggered on the during the 4 o'clock session, which is great, and it just continued to melt down from there. You know, just continue to melt down from there, which is good when you're selling it off, and you don't want to melt down when you're trying to buy, but Meltdown when you're selling off is perfect, right? And that's what happened. That was perfect. Only other thing we could have did better with this one right here is kind of like what I talked about prior, and some of the other ones, which would be just be moving your stop loss and taking your stop loss and just kind of like bringing it down and moving your take profit down with it as well, just to try to get more, more profit for yourself. But as you can see right here with this candlestick right here that bounced up at the 10 o'clock hour, and I think this right here is basically because there was some news information that came out on Friday. I have to go back and recheck it, or something you can go back and recheck as well. That caused that spike, and that's the other thing you kind of got to be careful about. If you having periods where there's not anything that's coming out, not any economic news or anything like that on the calendar, then moving the stop loss down could probably be at your advantage. If there are some news articles and things that's coming out, it might be a little bit tougher, right? If anything, you always want to make sure you got a risk-free trade on. So one of the things that we could have did better is at least move. Once we get into the profit, at least move our stop loss down a little bit to make sure that we guarantee the profit. Because here's the thing, you don't have to hit home runs every time you trade. You just need to either limit your losses or eliminate them, right? And small wins add up over time. This is a compounding game. It's not linear; it's exponential, right? So the more you compound over time, the more money you're gonna potentially make, and the better you're gonna be in the long run. Okay, so don't ever forget that, right? Just working on getting those base hits, get on base, right? And the more you do that, the better you're gonna be. Okay, so that was a good trade. Let's get over to the next one, which is Great Britain pound, New Zealand dollar. This right here is a pretty good one too. So once again, black line is my resistance, and the red line is my stop loss, and the blue line is my entry buy, and then the green line, see right here, is my take profit. Okay. So this one here is a really good one. Let's find the 3 a.m. candle. 3 a.m. All right, perfect. There you go. 3 a.m. candle right here. I don't know why I didn't have it in here, but this right here actually could be a. Let's see something. Make it smaller. Yeah. The reason why I'm doing this is because I'm looking at this and I'm saying this right here could actually be another resistance line right here, zone or whatever. But you mark enough of them on there, you get close enough. But anyway, so what was the thought process in this one? The same, kind of like the same thought process going through with the other ones as well, which was that we're looking at this, we're seeing price push through resistance. Right, we're seeing price starting to come down. Price tries to go back up again. Price couldn't do it; it went down. Right, price comes back up again. It's 3 a.m. and I'm looking at this right here. So you got a high, lower high, lower low, or not even lower low, lower high, lower low, a lower potential high, because these other candlesticks haven't formed yet. Right. But just looking at this and looking at that indecision, okay, I'm thinking this right here is possibly going to be, a move down, right? And I was right. We were right. It did move down, right? And so what we did is we came in and we put our entry buy right here, a couple pips below where the that 3 a.m. candlestick was at, and we put our stop loss a couple of pips above the 3 a.m. candlestick, right? And then we put our take profit was down here. It was right by our support zone, which is really good, because then that's a good place to, sometimes when you're looking at places to kind of put your take profit at, if you're buying, you might want to look at putting your take profit right there buy your resistance zones or a little bit above them. And if you're selling, once again, you probably want to be looking at taking putting your take profit right there by your support zones or a little bit below them, right? Because price tends to gravitate towards those areas, and then once they get those areas, either buyers or sellers to come in and push it up or take it down, right? So anyway, once again, this trade right here, it worked out perfectly for us. We were able to make some money off of that, which is really good. Um, what went wrong with this trade? Not a thing, right? Just another really good trade, which is good for us. What could we have done better? Once again, kind of, going back into what we talked about earlier about the stop loss. The one thing that you could do is you could go in here, and as you go into the profit zone, so let's say you go in and you hit your entry buy, and price is coming down, coming down, coming down. Then you start bringing your stop loss down, right? And you bring stop loss down when you're profitable, right? But just always remember though that there's always that potential for price to whipsaw back up, and so that's why you got to kind of be careful with that. Um, but it's one of those things that you could do, but we didn't do it, and I'm glad we didn't do it because, like I said before, we just waited for the trade to kind of materialize on its own, and it did. And this right here, the take profit hit at 11 a.m. So let's see, we got in at 4. It took us out at 11. So what is that? About 6, 7 hours, something like that. Which is good, right? 6, 7 hours, make some money. That's what you want to do. That's how you want. That's what you want to have. That's what you want to happen when you trade. Okay, you be able to get in, make some money, and get out. Okay, which is good. Let's see here. Get out of this one here. Oh yeah, so let's look at our total. So, let's see. Last week, last Friday, I think we had end of the week, or that Monday rather. I think we started the week at about 300 to the positive, right? Because I think prior to that, we had taken that 3,600 loss. If I'm not mistaken, I can't really remember. But anyway, long story short, let's look at this. Long story short, we are up $3,840, right? Which is great. And keep in mind, this is just a demo account, so it's not like, hey, I'm about to go to the bar and buy everybody a drink. But this is just to show you that you can come back from a loss. We were down at one point $3,605, right? Which sucked. Even though it was a demo account, it sucked because, a loss is a loss, right? And so we had to kind of go back in and not, do analysis and figure out, well, why are we taking these losses? How can we eliminate these losses? How can we go back and get this count back profitable? And a couple things that we did is that, just stay disciplined, continue to use our money management techniques, right? Continue to be disciplined with our trading, but then what we did is we adjusted some stuff. We tweaked some things as far as what we were looking at. One of the things that we brought in was start doing we started using the support resistance zones, because what I was doing when I originally started trading this right here, I was using this whole London strategy based off of what some other folks were using online, right? And so I just said, this might be a good strategy to use. It looked like it's pretty profitable. Let me try to use it. But the one thing that I noticed straight away when I started using the strategy is that there was a lot of inconsistencies with how the strategy would play out, especially when you were doing it the way that they suggested you to do it online. So that's why I kind of went in and said, well, let me bring in my understanding of the market and adjust it with what they're saying, and then see how we can make this thing profitable. So that's the other benefit I'll tell you about learning the basics, right, and understanding what you're actually doing, is that you can go out here and you can look at what other people's trading strategies and how they trade, and you can, you know what's bullshit and what's not. You know what I'm saying? You better separate the bullshit from the real shit, right? And that was key, because I'm looking at how these other guys are trading and stuff, and what they're saying. Oh, you do this, you do that, you put this together, put that together, blah blah blah. It's easy peasy, right? No, it wasn't easy peasy. You come in here and you do this, you do that. And next thing you know, the thing goes against you, and it's crap, right? The other thing I think some of the other guys were recommending is you do like a straddle technique where you come in and you put an entry price, you put an entry buy above, the 3 a.m. close, and then you put an entry sell below the 3 a.m. close, and then whichever one hits, that's the one you go with, and then you cancel the other one. Well, that's great, but I'm not going to necessarily be up all night waiting for that thing to hit. You know what I'm saying? I'm not going to be sitting in front of my computer screen all day, waiting for it to hit. Me personally, I like to go ahead and put my analysis in. And if I'm right, I want to go ahead and make money. If I'm wrong, I'll take the loss and get out. Because what I'm not going to do is just sit here and stare at this computer screen all day. Not going to do it, right? I got into trading so that way I can get my time back to go spend time with my family and friends and go do the things that I want to do and travel and do the things I want to do, not to sit here in front of a computer screen and hope something's going to happen, right? So do the analysis, get in, get out, right? Looking at these trades though, man, it's great feeling, awesome feeling. On the Great Britain pound, it's 51 pips, 51.6 pips. We made $367.99. And I know some of you probably saying, well, how did you get 51 pips and you trade in standard account and you only, netted like $367.99? Well, it's because of that spread, depending on what time you're trading and who you're trading through, you got to account for the spread, and so that's going to take away from some of your profits. Okay, if you're not familiar with the spread or you don't understand that term, go to our website, ForexTechMagazine.com. Right, there's articles on there about how to trade. There's even a free trading course, free, FREE. Right, that means you don't pay anything for it. Right, a free trading course that you can download that gives you this information, right? So that way you can go on there and you can learn about all this stuff. So any of this stuff that we're talking about now that you don't understand about support resistance lines, trend lines, candlestick patterns, any of this stuff that you don't understand, man, go online, download that course, and get started, man. Learn it. So that way, you too can start, getting to the market and start making some money on it. Right. The other thing too, if you already download the course, or if you trade in the market and you feel like that, hey, you know what, I wish I could become a better trader, a more consistent trader. I have some issues with, I know some of it, but I just don't know all of it. When you trade, and it's one of those things where you don't know what you don't know, right? And sometimes what you don't know is what could be costing you money, right? If you're having problems, that sounds like you, or if you just want to be a better trader all around, we also offer a mentorship, right? Or we come in and we try to help you, look at your situation, and we try to give you some advice and try to coach you along and help make you a better trader, right? And when you think about it in terms of the best athletes, the best people in their professions, they all pretty much have coaches, involved. LeBron James has a coach, Michael Jordan has a coach, Kobe Bryant, Tiger Woods, Lindsey Vonn. All these people have coaches, right, that help them improve their game, improve their ability. Even though they have a lot of natural ability, even though they're very talented and they're very knowledgeable, and they would definitely be considered an expert by anybody in their field, right? Because they're so great at what they do, they still have a coach to help them maintain their edge, to help them to push to be better every day, right? And the same thing that I believe a trader needs. Every trader needs to have a coach, right? Somebody that helps them to be accountable, somebody that holds them, some accountability, somebody that helps them push themselves to be better every single day. So if you need that, maybe to help you get through whatever that wall is that you have, that you can't get to that next level that you feel like that you should be able to get to, we would love to be able to come in and be able to help you with that, and so they're definitely glad to help you with. So if that's the case, if that sounds like you, definitely message me, and we can sit down and we can talk and figure out how we can help you to be a better you, right? Be a better trader. So yeah, the Great Britain pound, Aussie dollar, $367.99 on that trade. The Great Britain pound, US dollars, 68.8 pips, $688 on that trade. Great Britain pound, Canadian dollar, made $553.55 on that trade. And then on the New Zealand dollar, we made $491.25. So all those trades right there, plus the other stuff that we had throughout the week, This right here was a losing trade that we had throughout the list, like the day before, right? But all the stuff that we did throughout the week, it all totaled up, $3,840, which is, like I said, which again is phenomenal. It feels really good, considering the fact that, at one point in time, the account balance was actually down $3,645. So when you think about it, that's over 700. It's over $7,445 that we were able to accumulate essentially in about a week's time, right? To push this thing back to profitability, which is great, right? And if you look at our trading last week, we didn't even trade every day last week. We only traded. Matter of fact, we didn't trade Tuesday. I think we traded. What was that? I know we did Thursday. I know we did Friday. I think we did Wednesday. Wednesday it wasn't that much, but Tuesday we definitely stayed out of the market because we didn't. It wasn't something that was ideal. Didn't look good. The market was searching for direction still. And then I think maybe Monday we traded. I can't remember. But anyway, the point being is that you don't have to trade all the time, right? Trade when you see opportunities in the market, right? And to use good money management and find out where you are in relation to the market before you put on a trade, right? And essentially, even if you take losses, right, and you're negative, right, you have the potential to come back, right? You got the potential to come back. Just don't over leverage your account. Don't take on too much risk. Don't over leverage your account. Trying to get back too soon, and just take it back piece by piece by piece, and eventually you'll get back to profitability, God willing. Okay. So anyway, that's it for the trades that we did on Friday. So all of them was profitable, which was good. And so what we do today is we start looking and start trying to figure out, well, do we want to be in the trade today, right? And so you know what that means. We're going to go through, we're going to clear our screens, and we're going to just start looking, and we're going to see if there's something that looks good to us. Now, one thing you'll notice here, that there's a gap, right? So this is where we closed at on Friday, and this is, where we opened at on Sunday, right? And of course, now we're into Monday. And I think I told you this before, is that gaps got to be closed. It's not Lewis telling you that. It's just, this is what happens in the market, right? Gaps got to close. This is what it is. Now the question is, well, when does the gap close? Couldn't tell you. But gaps got to close. At some point, they will close. The question is, though, when? This is the New Zealand dollar. Let's check something with the economic calendar here. And I also told you guys too, when you're gonna get some type of economic news come out, be careful trading that market because it could be detrimental to you. All right, so we got some information coming out about the New Zealand dollar, but that's coming out later today. Late today, it's around about 5:45. That's going to be what? The consumer price index. That's going to definitely affect that currency pair. And then we got the U.S. dollar retail sales advance. Okay. Once again, that's going to be talking. That's going to let us know what's going on in the U.S. market as far as with consumers. Are they buying or not? So that's going to be pretty important. That's going to be pretty significant. Let's put in some trend lines. See what we got here. Boom. And if you guys got any questions, once again, about anything that we're doing here, man, give me a call. Not give me a call, but shoot me an email. Direct message me. We're on Twitter. We're on Facebook. We are on YouTube, Instagram. I mean, pretty much you name it, we're there, right? Just a matter of just reaching out to us, man. Love to hear from you. Anything you want to know more of? Anything we can do more to help you become a better trader? Let us know. And just keep in mind also too, um, we're gonna be switching over to a live account, to a real account. We're trading real money here shortly, probably within the next 2 weeks or so. Just want to give everybody an opportunity to still kind of come in here and learn, and just kind of like learn under this demo account. But we will be switching over here shortly, and when we do, yeah, love for you to be trading with us live if you're not already. All right, give you opportunity to make some money for yourself. All right. All right, so let's look at this, right? So we put in our support resistance lines, and you see how the market kind of lines up to it perfectly, right? Resistance, price went up through it, came back down. Support, price touched through it, came back up, right? This support now becomes resistance, right? Price goes down, hit this line of support, comes back up, tries to go back up, couldn't hit that resistance, so price is, it's like it's downtrending right now, right? And so what are we doing in a downtrend? We're looking for opportunities to sell. Right now it's 3 a.m. candle is right here by a support, right? So that does not make me comfortable to want to sell, right? I want to stay out of this right here, right? Because it's right there by support. It's going down, but it's by support. And I don't know if it's going to go through support, and I don't know if it's going to go through support and then go back up. It could continue to go through. I mean, it has a huge gap, but remember when we talk about the gap, that window has got to be closed. It just does. And it's not me making up the rules. It's just what the name of the game is, how the market rolls, man. The market's going to close that gap at some point, right? I think this might be a good trade for somebody, but it's not a good trade for me. So I would say I'm going to stay out of the Great Britain pound, New Zealand dollar tonight. Maybe tomorrow. You know, if it shapes up a little bit different tomorrow, I might want to get back into that. But as far as today, I'm going to stay out of that one. Put this one here. So again, it's kind of scrunch this up a little bit. Boom, go over. All right, let's put some lines on here. And like I said, folks, you don't have to trade every day, man. You do not have to be in the market every time the market opens up. You know, that kills me. I used to do that when I first started trading. I had to always be in trade. For whatever reason, every time, you know, I could, oh yeah, man, I see something, man, it's gonna be good. I can make a lot of money out of this right here. You know, every time, man. You know, and all I was doing was just overtrading my account. You know, and you know who makes money when you overtrade your account? Not you. Your broker makes money every time you overtrade your account. Because guess what? Every time you buy, every time you sell, they're making money off that. So they want to encourage you to keep selling and buying on stuff all the time, right? Because they're making money, whether you win, whether you lose, they're making money, right? And you got to smarten up. And you got to know that, hey, you know what? I don't need to be in the market every single day. I don't need to trade all the freaking time, right? Every day is not a day to trade. You know, sometimes I just need to sit back and just observe the market, and ideally let the market come to me, right? That's what ideally we need to be doing, not necessarily going out there trying to buy all the time or sell all the time. Okay, so here we go again. Once again, market has gapped down, and we know that this window right here has got to close at some point, man. You know it's got to close at some point. Question is, when is it going to close, right? So right now it's about 31 pip gap. So we took a standard lot. You know, we could look at trying to buy this and trying to sell it right up here at the gap. That might not be a bad play, to be honest with you. No. I might do that one. I might look at, there might be something, I'm going to take some notes here. I might go ahead and buy the Great Britain pound calf. That might be one we might want to just play around with. Try to get like a little quick something. And the only reason why is because of that gap, and we know that the gap has got to close. And I could take a loss on this one right here, and if I do, you know, we'll see. Probably would play stop loss pretty close. I don't know. And I'll tell you the reason why I'm looking at this right is because we already hit support, right? And his price already bounced off support, went up a little bit, right? Came down a little bit. It's going back up again, right? Potentially. And I think price is trying to close that window right there. And so that makes it something that might be kind of ideally to buy, to purchase. I don't know. Because we're looking at this candlestick right here, which, you know, this could be like a high, right? And this thing could be getting ready to go back down the opposite direction. So what we do, as always, we're not going to do a market order. If anything, we'll do an order, you know, above our stop loss. I'm sorry, above our high of this candle, right? And then wait to see if we get in, and we'll do our low right here. So that way, if we don't get in, we get out, right? And we just see how it goes. But that right there doesn't look like it might be too bad one. It might be something that's kind of good, okay? So, who's saying buy that one? Maybe. What's the next one? I don't even like this one right here. I hate this candlestick here. But then too, maybe not so much. Let's see. What we got here? All right, so this right here was the support. It crashed through. Looking at this candlestick pattern right here, this might be something to buy. Got to close that window. It might not be a bad one, man. We might look at this one right here, the Japanese. Once again, you know, all my pens are running out of ink. Don't do what I do, guys. Make sure you come prepared. So if you're trying to make money, right? Have pens that got ink in them. Or you look crazy out here. All right, so that might be one. All right, what else we got? Let's see, Great Britain pound, Aussie dollar. Man, I tell you, man, this thing hit through support once again. This might be another one, bro. I'm gonna try to. I might do some here too. I didn't even really plan on doing anything today, but you know what? Hey, it is what it is. This is the only one I really kind of don't like. And I tell you the reason why I don't really like this one is because I know that there's some news coming out today about the U.S. dollar. Yeah, I'm gonna stay out of this one right here just because I know some news coming out today about the U.S. dollar, and it's only a 20 pip move. So I'm not want to risk it. I'm good on that one, even though I think it probably still will close that gap. But I'm just gonna leave it alone for right now. Okay, maybe. Yeah, I'm gonna leave it alone for right now. But what I will trade today, though, I'm going to trade the Great Britain pound, CAD, and the CAD. I'm going to do the Great Britain pound and Japanese yen, and I'm going to do the Great Britain pound Aussie dollar. Right? I think all these are going to be going up, and I want to jump in and try it. Right? And I'll let you guys know tomorrow how it works out. So with that being said, I'm going to go ahead and get ready to place the trades. As always, man, I love to leave you guys with some type of encouragement. And once again, I'm just going to go back to the great Zig Ziglar. He had a word of encouragement that I thought was really great. And he said that fear, F-E-A-R, it has two meanings to it, right? And really, when you think about these two meanings, it's gonna think about how it relates to you as a person, right? So for some people, fear is forget everything and run, right? That means that when tough times happen or something scary happens, they just pack up and leave. And then for other people, fear means face everything and rise, right? So, you know, what type of person are you going to be? You know, are you the type of person that, you know, when stuff happens, that you're able to face it, still rise to the challenge and rise above it? Or are you the type of person that's going to something's gonna happen. You forgot everything that you learned, forgot everything everybody's always told you about, how to handle tough situations, and just pack up and leave. Anyway, man, I hope you guys have a wonderful trading day. I hope you guys make plenty of money, tons of money, and I hope you guys are safe out there. And don't forget to use your stop loss whenever you trade. God bless you, and I look forward to talking to you guys again tomorrow, God willing. And hopefully, we're going to have a successful trade here. At any rate, I am out. I'm about to place these trades, and you guys take care.